Don't mistake a brief rally for a trend. Okay, we've got a few of those happening at the moment. We're going to look at that today and what we do to evaluate these sorts of things. Hi, my name is Richard Lee. I manage the stockradar.com.au website. We use a unique high conviction trend strategy to focus on stocks with a high probability of going up. We then wrap them up in a safety net of risk management because occasionally we might get it wrong. So we're going to talk more about that in trading tactics a bit later on. There's plenty of high percentage bounces. IDP Education has jumped 13% from its low. This is one we're going to look at a bit later on. We look at the ASX stocks. But the reality is most of these are only bouncing in relief and doing very little to reverse downtrends or neutral positions. So don't hope too hard and look at things, the reality of things. We must follow a clear and methodical path to get a trend reversal. So keep your perspective at the moment. Okay, very, very important. So here am I at the moment trying to keep myself ahead trading stocks, and so far we're doing it reasonably well. Even though the market's been pretty tough for the last 6 months, it's a matter of managing that portfolio as best as we can. Okay, so just as normal, we're going to a normal strategy. Trading tactics, I'm going to be talking about capital preservation is vital in keeping yourself in front of the pack, and that's very, very key. But don't forget, run your winners hard. South32, Computershare, National Storage, NAB, all those stocks are doing well. There's not many of them, but they're doing well, so you're going to focus on those ones at the moment. Okay, so we're going to first get into the markets. The Dow, again, it had a big rally last night, but perspective-wise, no real biggie. We do have some support down here in S1. We can see these long candles down here being supported, but the pressure is really down towards this support at the moment, and it's holding still, the Dow, even though we've got some pretty high volume activity there, plenty of selling, buying, but the sting has gone out of this market pretty well for the moment. Okay, we look at the Nasdaq. Nasdaq looks a little bit more downtrendish. It's struggling. We've got some high volume stuff pushing things down. We had a big up week here, which didn't really do much for the index, but we're below the average. The momentum's gone right out of this Nasdaq. So really, again, downtrend, uptrend, we don't know. The pressure's down, which is a risk-on situation for me. So that's the two indices there. The gold price at the moment, it's trying to open the door, although it didn't do too well last night. We've got this little door ajar line here, and the week hasn't finished yet, so we may finish below, above it, I don't really know. But I'm still more looking at this R2 level up around 2034 to really give me a good signal this is happening. There's no real excitement down here. There's a spark of life momentum. These last few weeks have been up, but we'll just take that with a grain of salt a little bit at the moment until we get some more shorty through the highs. Okay, Brent crude's been a really good one. It's been such a, that's a copper. Brent crude has been such a good mover of late, and we've seen this break to new highs here, and it's doing justice to that perfectly, and the jump this week has been meteoric. We're seeing all this beautiful volume through here. And momentum has been very, very strong, so we've got a high through here. What I want to quickly do is, now that we've got through this level here, is just go and have a look at a monthly chart for you, and you can see what we're seeing here. This is the trend we've seen since the start of 2020. This is the breakup we've seen. This is a mighty rise through 85 up to now 112. And so realistically, we've got these areas up here, 2008, 2011 highs around 126, 140, and that's a reasonable expectation for the moment to take. So Brent at the moment is looking pretty good, and it's probably a shining light, not just in the commodities market, but also for our stock picks, as we do hold three big stocks in the oil sector at the moment, and I'm going to look at the three a bit more later on that actually haven't really run on that much as yet. So the buyers are in control here, momentum's great, all looks good for crude, so that's being our saving grace at the moment. Copper, it's trying, but it's not really getting there yet. It's still stuck in this trading range. We have got a little bit of life come here in the price. Volume's a little bit iffy still. This is still positive, so it could well break through here and have a rally. But for this stage here, it really needs to break above R1 for me to be really looking at this as another runner. Okay, now the ASX 200. Well, we know what it looks like. We've seen this for the last couple of weeks. The pressure is certainly down. Even today, we're going to be up 50, 60 points. At the moment, I think we are, which really doesn't put that much of a dent in here. We've got this downtrend here. We've got the resistance, the lower high here. Sellers have taken control. Pressure is down, okay? The one positive we've got 1, 2, 3, 4 little lows here at about 7,000, which is quite good. but really still, we've got this one lower high, this second lower high. Really the downtrend is in place for the ASX 200 until we're told otherwise. And as you know, our stock pick count has dived. We're now down another 7 this week to 22, to 18 stock picks out of 168 stocks, and 4 ETFs still rallying out of 21 that we covered there. So really that's, especially the 18 stock picks out of 168 really tells a pretty big story there. Okay, our 5 stock portfolio is down to 3 out of 5, again getting unusually low. The 10 stock portfolio has dropped to 4 out of 10, and that's significant there. So we really are getting this risk off, the risk on situation at the moment. Property sector by default is still at the top of the trend intensity table, but all the other ones are greys and reds, and you'll have to subscribe to the site if you want to go and have a look at that. The building the portfolio that I've been running since last March, it's now been running for a year. It's actually up about 10%, which is not too bad. The ASX 200 really since March is up about 6%, so we're doing okay there. The main thing is we're in positive territory, and it's been a really jumpy period from August this year, as we can see. So it's been pretty tough in the portfolios, and you can see my profits, my equity curve on the homepage has come off the last few months, and that's what happens. Markets go up and down, and we don't get too disheartened. We just wear it and we battle on regardless. Okay, the current holdings I've got in the building a stock 5 stock portfolio is Computershare and Woodside, which has now jumped again today. Nice call. Okay, now let's go to some stocks. Firstly, I just want to have a little bit of a chat today. I mean, we've got all things flying everywhere, and so I just want a little bit of a chat about my strategy and how it works and what I do and why I do things what I do, and just put in perspective some of the things that have happened, okay? So firstly, I want to focus on one of the positives, which is National Storage, which has been a really nice, steady uptrend. It's made a new high here. It's come back and found support here. It's up about 30% since December 2020, which is a pretty good return. Trend intensity rating is 8. The volume's down here. Not telling a huge story. We've got a bit of a squeeze up there, but if we look at this here, it's still positive. Momentum started to slide a bit as we've corrected through here, but quite encouraging. It's holding S1. The trend is still up, so that's quite good for National Storage. So that's really how I've managed that for the moment. So it's just a hold, and we can see the trend running along the trend line, the moving average running along there fairly well, supporting that uptrend. Okay, so National Storage is still one of our 20 or 18 or so stock picks. Okay, I talked about IDP education before, and this has been an interesting situation. I just want to talk a little bit about my trading strategy and how it works, because it is different to a lot of other people. I'm not a long-term thematic. I'm about trading trends, trading breakouts, and managing those trends. So some of them might look really short, some of these trends, but that's the way it happens. If that's how it unfolds, that's how it unfolds. So here for IEL, we really had a very good run on this this year. And for those of you who did follow it, let me just blow this up a little bit more. Okay, so we got the new high here back in June of last year. And so the signal was given here, so our entry is here at 29.50. Seems like a high entry, but that's just the way it works. That's how the system works. We then had about 5 or 6 weeks of downwards, which people are starting to get a bit pissed off at me at this stage because he hasn't called it too well. However, my initial stop is down here, which is around the 15% level, and it held it. It then shot up strongly. Everything looked fantastic. We're on it all here. The volume's been good. Momentum's been good. And then we had a bit of a crackdown here. Now that crackdown, sorry, it's just keep fiddling around a little bit. That crackdown took us through the stop, which has risen up to here, okay? So that, as that closes below the stop, I then get out on the open the next day, again, in the next week I should say, again, the end of the week it's up, so again, you're pissed off with me because I've made a bad call, but then we get 2 or 3 weeks down, and then we get 7 or 8 weeks of real downward stuff. So this has come back to support. Now just to have a look at this trade here, we got in at 29.50 on the new high, the open this week, and then we got out the following week and the stop at 34.43. Okay, now what that looks like is that's a 16.8% return. Not bad, but days in trade were 210 days, so I annualise that return out to 27.3. I do that because 90% of my trades are short-term, within 12 months, and that's how I do it. So if I can make money over and over again within a year, that's what I do. That's why I annualise this out. That's why it comes to this. So that's a simple trade that I looked at. So it is amazing when you see this market. It just looked like it was going to go through to the moon here. Then all of a sudden it just turns around. It happens, and it's so essential to look at your stop and to heed it. If you don't do it, you will fail using my strategy, okay? So these are very, very important things that we've got to note here. So at this stage, I also mentioned that IEL has had a very, very big rally for the last couple of days, and it's probably up again today. So we've had a rally from this support. This is 1 week. 1 week only, okay? So I need some more work to be done for this. My two signals are new high, which is probably not going to happen right now, or trend reversal, which means it has to rally, maybe towards the average, pull back to a higher low, and then rally through that peak to get us a signal. So that hasn't happened yet. So really at this point here, the good thing is about it, it has been a good rally, it's been good value, it's a starting point, and starting point only. I am very, very conservative in what I do. I need to see a trend established before I will go and enter it, okay? So that's IEL, that's what it looks like. It's an interesting situation, but the reality is we've made money on these trades, and we're just going to watch this carefully at the moment without getting overexcited, because the market has come down a long way. Okay, now I'm going to look at 3 energy stocks, the 3 that I haven't entered, and as to why. That's at the moment. I have had a trade since the mid-2021 on Whitehaven Coal, and I'm going to talk about this now. Whether the trend reversal was here. Remember the previous downtrend for Whitehaven was from a long, long way up, okay? So down, 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 down. We then get this trend reversal behaviour. Remember, I am conservatively waiting for this sort of pattern to happen, and this happens over from sort of August 2020, for about a year almost this has happened, okay? So once it does happen, I then get the signal on the break above here. So I buy the open the next week, which is not a bad entry. Okay, probably the Dow is probably down. That's what happens sometimes, so you get a good entry. So 207 is the entry. Again, this went along swimmingly, and then all of a sudden, and crude oil can be so dangerous, all commodities can be so dangerous with their ups and downs. So it's come off here. We've had our stop has been hit here, okay, confirmed by the weekly close. So I get out on the next week at 255, okay. So that trade has yielded us 23%. Days in trade 135, and you can annualise that out at 67% if you like. Whichever way you want to do it, I'm just trying to explain these short-term trades are not to be sneezed at. I'm not looking for a long-term thematic. I'm not looking to buy the absolute low or the absolute high. I'm just looking to take a chunk of trend, and this is how I do it. And although it may not look a huge amount, the returns are pretty good. Now, it can go from a stop loss, it can go down further, sideways or up. In this situation, it went sideways for a couple of weeks. It's been going straight up pretty well since. Okay. So every trade I do is like a cocoon, it's like a separate entity. I'm not too concerned what's happened before, I look at the reality of what is happening now. And now we're getting a good week, probably above this high. So I'm now, of the down, sideways a high, I'm actually now getting a new high, and quite potentially I'm going to get a signal tomorrow, a close above that level there, to signal a re-entry for Whitehaven Coal. Okay? So again, as I said before, we analyse returns because the majority of our trades are less than 12 months. So with this rally here, we can see the pressure building here, and the volume, momentum is kicking higher. Trend intensity rating is +1, so it's neutral. But this here, the price action being above there, will kick that into positive territory next week. So Whitehaven Coal, although you might think it's late to the party, we don't know what oil's going to do, we don't know what energy stocks are going to do, but we saw the big downtrend for Whitehaven Coal, so there is plenty of upside in this stock. And coal, believe it or not, is in great demand. Whatever you think about renewables, coal is here to stay for the moment. Okay, so Whitehaven's doing okay. So let's now go to the other 2 stocks that I'm looking at. Viva Energy, another stock which again, a short-term trade here. Let me just show you this one here. Okay, Viva Energy, we had a new high above here. We got in at 208 above this high, it broke above here. So the entry is here, the volume is good, momentum is good. It then rallies and hits resistance, which is the old highs, comes back, and we're stopped out. So we did eke out a little profit of 5.8%, 208 to 216, and even that, because it was 150 days, still an annualised return of 13.6%. So, even these short-term trades, small as they may be, if you can repeat those sort of trades, then you can keep doing them pretty well. So that's a simple trade for Viva Energy. Now, what we've got now, the stock didn't go down, it went sideways for a few weeks, but now it's decided to go up. So now I'm interested again, and I don't know what's happened today. It may be through here, I don't know. But this is a significant point, and if we go back to here, Viva Energy is a recent listing, and that is the high, the all-time high. So if we're talking about an all-time high for Viva Energy, that is a significant break. for this stock. So if we can get through here this week, close above here. Volume's been quite good through here. Momentum's positive, so it's going to get a rating. It's like Whitehaven, a rating of +1. It will kick into positive territory next week if it closes above this high here. We're now in for a new high trade above the all-time high of 256. So that's all forgotten. I'm now living in the present of a new high, and I'm going to follow that with my stop and trade it as I normally do with every other trade. Okay, so that's Viva Energy, probably not a bad opportunity at the moment, along with Whitehaven Coal. Now, Santos has been a bit of a stumbler. For whatever reason, it has not responded for the last 14, 15 months to the oil price rally. It has been stuck in the middle of this range here between $6 and just below $8, okay? So that's part of the reason I don't hold this, because it hasn't broken above this resistance. If it does, it may well give me a signal. Trend intensity is -1 at the moment. We have some volume appearing here. Momentum is back in positive territory. So it's quite possible that this may well give us a signal next week. You'll have to check on Stockradar to see if it does come as an entry. Why isn't it taken off? Because the resistance has been there and it has kept this stock from going higher. So you need to look at the charts is always a useful thing for you to do to try and understand why a stock hasn't gone up. So Santos is one that's been a bit of a stumbler. There's been lots happening with that stock, corporate-wise, so that may have had something to do with it. A bit of confidence needs to be built into investors again, and that looks like it may be starting to happen. If it does break through here, then we could be having a good run. We're looking at the highs up here, up around near $9. Okay, so that is Santos. So they're the three energy stocks. The other we do hold three other ones: Woodside, Beach, and Origin. And just to look at Woodside, which is a stock that we haven't entered for a while, but I'll just have a quick look at it, and you can sort of see what's happened here. Sorry, we'll just go to Woodside. So we can see this big reversal pattern here we've got on Woodside. Okay, so we've taken a long time to build this, a couple of years to build this, been a lot of false starts, but it just hasn't been a performer, Woodside. But finally, we're now starting to get off this $20 area, get through this $30 level. The break here was around about $26, $27. Volume's been fantastic, and the momentum expansion. So all of a sudden, for whatever reason, Woodside is in favour again. And again, you could probably look up towards $40 as a good potential objective for this stock at the moment. And we're thinking about crude up around $130, that resistance, that long-term resistance. So Woodside is a trend intensity rating of 10 and is looking very strong. And I probably believe it's probably up again today, I would think. Okay. So that is really the stocks I want to show you today. Just talking a bit about my strategy and why I do what I do. Sometimes it looks strange that I get in and out so quickly, but part of the reason is protecting the profits and not taking losses, and this is what I'm going to talk about right now. Okay, trading tactics. Capital preservation is vital. Now, some of you may have seen this graph, some of you may not, but I will show it, and I'll show it again and again because it's important. Now we've got some. This is the mass of a recovery from a loss. Starting account balance 1,000, percentage loss. Your ending account balance after your loss. What you need to make back to restore that loss, and the ending balance when you do. So I'm looking around here. My losses are locked in between 10 and 15%. Okay, so I need to make between 11 and 17, which is not too bad to recover those losses. Okay, but if I go down to start running losses of say 40%. All of a sudden I need about 67% to get that gain back. If I go back down to 60%, I need 150%. Now this starts to grow exponentially. If my loss is 75%, I need a 300% win to get that money back. And that's an awful lot. So keep those losses small, for God's sake. Otherwise, you will struggle to make it back. Graphically, it looks like this. It's an exponential curve. So if my losses are limited down to here, this is right, I'm happy to work here. I just don't want to take these no matter what. Even if I think it's the most bullish stock in the world, I'm not going to do it because that's what I've got to do. I've got to manage my risk completely, and I can't go against that rule. Okay, so the message is, don't do it. Don't let them run. It's like, I'll let it go for another week. I'll just let it go for another day. It doesn't work. Okay, stops are your friend. Manage the stop process with consistency. Do the same thing every time. Okay, Capital preservation is vital. This is why I'm always ranting about it all the time, over and over again, because it really is so important that you don't, because you can't get, it takes a long time to get it back. It's hard to get it back, and we don't want to do that. So that's just something that you must learn to do. If you don't manage your capital properly, you will struggle. Okay, so when you think about going against that little rule, or going against that little stop and saying, I'm going to hang off another week, or whatever it is, I'll give it another day, don't do it. Follow those rules. Okay, so just try and keep yourself ahead by making sure you don't take big losses, or that even if you have a profit, protect that profit. Even if it's a small profit, like the Whitehaven one we saw, and the Viva Energy one we saw, and the IEL one we saw. They were just chunks of trend that we take, and that's what we do. Okay, so I hope this helps you understand a little bit more about what I do and why I do it. I'm not a long-term thematic. I don't look at the fundamentals. I look at the price, because that tells you what it does. And we know price can go one way and fundamentals can go the other way quite often. Okay, so what's happening at Stockradar? The newsletter was out earlier this week talking about controlled and disciplined behaviour needed to ride this bunking bronco, which is going all over the place at the moment. Managing trends and limiting losses is what it's all about. The micro view covers the banks. I have a good look at all the 6 banks. I look at the ETFs and what the risks are involved with ETFs. And we've seen a lot of those big flavoursome ETFs come off recently. So a little bit about what they're about. I look at the Ukraine event and how these events relate to stock market behaviour. And it's not an uncommon behaviour. Okay, it's fairly repetitive. And so I talk about that. Don't let downtrends destroy your wealth, okay, which is what I've been talking a bit about today, because they can, and they're hard to come back from, as you know. Gold stocks, are they an opportunity or not? Well, you've seen my little view on gold, and do I hold any gold stocks? Well, you'd have to go to Stockradar to have a look at that. I talk about support levels, what are they and how do I use them? And there's lots more, and a special stock on alert, a very interesting stock that I've got in there in my newsletter this week, which is certainly worth having a look at. Okay, so that's really all I've got today. Keep yourself safe from disaster and manage your positions, both stops and losses, with religious fervour. That's what we do, and remember, keeping the long-term vision of your strategy always in sight. It's very easy to get disheartened when the markets are tough like they are now, but that's the time when you've got to toughen up and really implement your strategy religiously, okay? If you're going to sign up to Stockradar, you must follow the rules, or the process will break down, as will your results, okay? Any system or strategy must be followed for it to work, okay? Emotional trading and what you think is out, while discipline, patience and vision are in. Okay, stay safe, watch your trends, heed your stops, and I'll see you all next week. Thanks very much for listening.